Hey, good afternoon, everyone, and welcome to the Stock Market Today video for Tuesday, November 14th. I'm Ed Carson, IBD News Editor. Ali Coram is off today, so joining me today as a special guest, but not a special guest to IBD videos. It's David Saito-Chung, Deputy Markets Editor, frequent guest on, and host of IBD Live. He was IBD Live host today, in fact, and so it's welcome to have you on board. Huge day in the market. We'll get into all of that. NASDAQ was up big. Everything was up big. But are there any stocks that you would like to take a look at today, David?
Well, first of all, thanks for inviting me today, Ed. It's a thrill to be part of a show on a very positive day for long investors. So let's look at three stocks: DKNG, that's DraftKings. We're also going to look at Toll Brothers in the home building space. TOL is a ticker. And finally, one of the best performing tech companies in AI and data center, that's SMCI, Supermicro.
Yeah, that definitely reflects how we had a lot of breath today. So I want to get right to it. Boy, the NASDAQ up 2.4%. We saw a 1.9% gain for the S&P 500, 1.4% for the Dow Jones. Huge gains for the Russell. I'll show that in a little bit. A lot of that, what do you make of this action? Really powerful stuff. Obviously motivated by the CPI inflation report and Treasury yields.
Absolutely. That was the spark for sure. We definitely shouldn't look at equities in a vacuum. And that big drop in the Treasury yield down to, I believe, 4.44%, that's well off the recent high of 5%. And so when yields go down in the bonds, that makes equities more attractive. Ed, I would like to just add one piece of color to today's great action. It comes after IBD spotted a key follow-through day on November 1st. That was on Wednesday, November 1st, on the day that the Fed decided not to change interest rates. And since then, we've had 7 to 8% gains in the indexes. That's a bankable rally, and it's a really good time to be looking at individual stocks too.
That's a good point. In fact, we had the November 1st rally, and then on the NASDAQ follow through day, then we on the S&P and the Dow followed through on November 2nd. And really, it's been a pretty easy rally. I mean, I was just talking about it in the office a little bit. It's like we had a clear follow through, then we had a subsequent follow through day.
Right.
Stocks have been breaking out or flashing buy signals the whole time, but not racing higher either. So it seems like it hasn't been hard to get aboard this train. The train is moving, but you haven't been like, oh my goodness, it was a bullet train, I can't get aboard this thing. No, it's been pretty nice to go. Some really nice moves today. Obviously the NASDAQ, I think, like we were going to look on a weekly. There was some nice, now it's getting above like a long trend line or getting up to a trend line here, getting above 14,000, getting toward the September highs. It's just been clearing resistance after resistance.
It sure has. And, speaking about getting on the train, when we had that follow through occur about 2 weeks ago, Ed, IBD and investors.com suggested that readers and investors up their exposure in equities to roughly a 20 to 40% level within their growth stock portfolios. Now we are very close to possibly even going to that 80% level. We're currently at 60 to 80%, and it wasn't like we immediately upped that exposure within a couple of days. I mean, it's taken 4 or 5 days for us to see whether this rally would stick. So at the same time, I want to highlight that the fact that even though the Russell had an incredible day, 5.5%, we're still seeing really strength in large and mega cap stocks. When you look at the Russell 2000, you can see that black line, the 200-day moving average, is still tilting lower, and it still hasn't retaken that. In November of last year, we had a 6.1% gain in the Russell 2000, and there wasn't really much follow through after that. The Russell didn't hit 52-week highs like the S&P and the NASDAQ did. So I think right now it's great that, we had great breadth in the market. I think 10 to 1 gainers versus decliners on the NYSE, but still right now it feels like more of the bigger gains are in large and mega cap. We'll keep an eye on the small caps though.
Yeah, and I'm just going to run through some things quickly. RSP also had a good, which is an S&P equal weight. This outperformed basically, significantly the S&P, but still below the 200-day line. One thing that I think was notable is that QQEW, which is a big cap index, it's an equal weight of big cap tech, so it's not like small fry. But this is now decisively above the 50-day line, decisively above this trend line, suggesting that it's not just the mega cap. So it may be more big cap, but it's not just 5 stocks, and there were a lot of sectors doing well. And QQQ, which is getting to be more weighted to the mega caps, that's getting very close to hitting a 52-week high. So there's that. XHB, we'll talk about it with Toll Brothers and everything, but boy, with Treasury yields plunging, this is what's happening. We'll get into it more. XHB, XLI, seeing the industrials come on. I mean, they have more work to do, but you're seeing some names in that space get in there. And of course, SMH is now right at a new high or right to it. IGV, exceeding a high. So a lot of strength in these areas going through there. All right, so let's get to it. DraftKings, nice upside reversal today. There's some news today. What do you think about this stock right here?
This is a stock that's doing very well in the consumer spending area. And it's a relatively new stock. It hasn't been around that long, but it's shown some incredible sales growth and a very, very possible likelihood that it's going to go free cash flow positive next year, and maybe even surprise Wall Street by producing, some non-GAAP earnings. For that reason, DraftKings is a full-size position on the leaderboard portfolio. That's roughly 11, 12% of the entire model portfolio for growth stocks. There's only one other stock on leaderboard that actually has a full position status. That's ServiceNow, which we're not going to talk about, but NOW is another emerging leader. Now, I want to be very clear and full disclosure, I do own shares in both NOW and DKNG, but I thought today was extra special because you can see on that daily chart, the stock, after breaking out on earnings, moves sideways in a kind of a tight range. We like to call that a shelf. And a shelf is a small area on the chart where once it rises above the highest price in that shelf, you could actually add a little bit more to your winning position. Therefore, with that investor day and a positive vibes from their outlook at DraftKings, we felt that this was really worth mentioning. And ideally, we're gonna see the stock lead all those moving averages higher as well.
Yeah, and just to add into that, the volume was tremendous on the earnings, and then it dried up a little bit as it paused for a few days, and then today, strong volume again, just indicative of all of that. Really strong action there. Toll Brothers looked like housing was going to be repossessed
Yeah.
just a few weeks ago. Toll didn't look quite as bad as some of them, but boy, what a turnaround.
What a nice gap up, and that follows a prior gap up within the base, Ed. And we have earnings coming up. That's something to be watching out for. It's amazing that this doesn't typically fit our parameters for high growth stocks, because you look at the estimates, they are not that rosy. But clearly, Wall Street is getting around the idea that the country needs more new housing, especially with uh, the, I guess, the Gen Z and the Gen Y having families, wanting to have their own homes, and there's such a lack of supply. It's interesting too, Ed, that these home builder stocks, while breaking out, are occurring at a recent peak in mortgage rates. Now that interest rates came down sharply, maybe we're going to see even more demand for housing and obviously for mortgages.
Yeah, I think that's the bull case. And obviously, again, here the volume strong on that run up, strong again here. That had dried up during the handle. It's doing a lot of things that you want to see it on those hands. The blue dot on this RS line, marking that it's an RS line new high while it was in the base or breaking out. Very bullish sign. So a
That's a
lot of
great point,
positive.
Ed. Yeah, let me add that for those who are new to IBD, that blue dot means the stock is showing exceptional relative performance versus the S&P 500. And on MarketSmith, if you want to compare every stock to, say, the NASDAQ or the Russell 2000, you can actually customize that. But we prefer to use the S&P 500 as our gauge for the RS line.
Yeah. And that is something, a really powerful tool, a good way to find good winners in good markets or bad in that situation. SMCI is a hot or cold stock, and boy, it was white hot today. I drew some trend lines, just partly just to see what was going on. Finally, decisively moving back above the 50-day line. What do you think about this name, and where do you think maybe people could enter or should enter, or in this name?
This stock had a nearly tenfold move from its lows. If could we go to a weekly chart so people
Yeah.
have a better perspective on the amazing run it's had? In fact, you'd have to use the best fit feature on the
Hmm.
weekly chart to be able to see the entire run up from the I guess it was sort of like the 2021, exactly. 2020 started to rally. There were a number of bases that formed, and then it really accelerated as AI became a very, very investable theme in 2023. So I think right now, Ed, this current base that is forming looks totally normal. After you have such a 5-bagger, a 10-bagger type of move in a stock, it's very common for the digestion of those gains to take place over a year, 2, or even 3 years. There are plenty of examples to look at, but we like SMCI right now because the company still has a very good narrative related to data center growth. Obviously, they're going to come across some very difficult year-over-year comparisons.
Hmm.
No company is going to continue triple or quadruple digit growth, forever. But even those stocks see growth that's decelerating to, say, 25, 50% or more, that's still really, really solid, especially now that the company is in large cap territory.
Yeah, and the growth is supposed to pick up, even though we've already gotten Q1, which was flat profit. It's supposed to be up 48%. Now, estimates are estimates. That doesn't mean it's going to happen. But that's a positive sign. I was just wondering, technically, it is because this had such a big move, and it's like just now seems like it was hitting some buy areas. I'm not saying this is specifically exactly where you'd go. It seems like this would be the official buy point,
Yes.
317.50.
Hmm.
But it's like this seems like where you could have entered. But boy, it's hard to, like, it's up 15% and it's just getting there. So I'm not I'm not sure how you would play this right now.
Well, I really like the trend line that you drew. And if you say, you really like to concentrate in the best stocks and you want to target, say, a 10% position within your portfolio, now might not be the time to go, fill that entire position. You might want to, say, take 2% or 3% of your portfolio and put it in now and see how it acts. Clearly, 300, a century mark, is going to be a very important technical level. It might find some resistance there. It actually might break above 300 and then hold around there for a little while. We,
Hmm.
we, we could see a handle form. We could see the base, develop more of the right side. This is not a really good double bottom, frankly. It actually looks like more like a triple bottom. And the founder of IBD, William O'Neill, often said that triple bottom bases are often flawed. So that's okay if the stock can continue to show really, really good positive price and volume action and the market stays bullish.
That's a very good point. I also want to note that tomorrow, like, this is obviously very much, as you say, AI centered. Microsoft, which is one of the leaders in AI, it's going to be making a lot of AI announcements, perhaps unveiling an AI chip that may or may not happen. But that's at a conference that'll start at 9 a.m. Pacific tomorrow. So that could be very relevant for Microsoft, obviously for NVIDIA, but for the entire AI space. So definitely something to keep in mind there. And definitely would want to encourage everyone to be working on their watch list and just remembering that, we have had big moves. It's always possible we'll have a pause, a meaningful pause. We certainly haven't had much of a pause in this rally so far. And so it's been easy to gradually add exposure, but just knowing that could come in. But boy, thank you so much, David, for your insights today.
My pleasure. It's great to be
And
with you here.
great to, and I think I'll see you again soon. Uh, in any case, for those for tomorrow morning, I'll be hosting IBD Live. Boy, I'm sure there's going to be a lot of interesting discussion about all the stocks that were breaking out today and setting up tomorrow morning. then it'll be, then tomorrow we'll be right back here, Alyssa Coram, and we'll be back in the chair to oversee that. And with that, I hope everyone has a wonderful evening, and we will see you all tomorrow.